School has some devices for loan. Those are the headlines. I'll be back with the news at 6.
Which is only minutes away. My apologies. Thanks, Susanna. Nona Peltzer on the other side of me with business news. Hi, Nona. I'm fascinated by this. Someone saying New Zealand is more likely than not to benefit from a trade war between China and the US, at least in the short term. Who is saying this, and why are they saying it?
Now, this is a really interesting woman from the United States. She's the chief economist for the global ratings agency S&P for the United States markets. That's all she concerns herself with. That's a huge job. And I was looking through some of her work. She gave me quite a lot to read through, and I was impressed. I mean, this is a person who's really looked at the inside out of where things are at in the United States economy, and what she's saying is that at the moment the U.S. economy is booming along, the dollar is very high, and that is a direct benefit to New Zealand because U.S. consumers have more money in their pocket than they've had for a while, and their dollar is stronger, so they can buy more export-type products, tariffs or no tariffs. They're spending more on consumer items, and they're going on holidays, trips to places like New Zealand. And because New Zealand has been very active in doing bilateral trade agreements and, of course, the Trans-Pacific Agreement and so on, this is very positive for New Zealand at a time where the United States is stepping back. So in the short term, good news for New Zealand because there's lots of opportunity, and although it may disrupt supply chain, employment, and other things around the world, it's going to have very little impact on the U.S. economy for quite a while. It will only start to have an impact if it becomes a very deep-seated thing, and there's no sense right now that that's going to happen.
You spoke to her, right?
Yeah.
And you've got a grab from her.
I do, yes. And she. Well,
What's her name?
Her name is Beth Ann Bovina.
Right.
Let's have a little bit of what she had to say.
New Zealand will benefit from the stronger dollar. In terms of how that's handled, in terms of offering incentives to encourage money to be spent in New Zealand as opposed to possibly its trading partners. Now that also goes into the worry, of course, then you could have a tit for tat with its trading partners. So there's a worry there. I would suspect at this point in time, what we're starting to see is other countries start to make an agreement in terms of trade agreements. That's a positive. The U.S. the worry, of course, we're still the biggest economy, and we can't be ignored. But if the farther we stay behind, the farther the U.S. stays out of these agreements, eventually it's going to hurt us. And those countries like New Zealand could move ahead without us.
S&P's Beth Ann Bovina, fascinating.
Yeah.
Investor confidence and
It's
another survey.
I'm sorry to say it is another survey. I'll take my papers back here. That's right, John.
Take your survey.
Yes, well, it's actually fallen to a 2-year low, but that's still not as low as it has been. It is a 2-year low, but we've seen investor confidence slump even more.
And in part, that will be about interest rates, right?
It's always about interest rates.
Right.
Because New Zealand investors favor term deposits over almost every other kind of investment other than property. And both those types of investments have been sluggish over the last short while. And that means that their returns are not so great. And so a net 16% of them believe that their investments will improve over the next couple of years, whereas 21% thought so before, and that's not going to happen with term deposits. That money is pretty much fixed. The Reserve Bank has signaled that, so it's likely to even be worse than that. So we can expect confidence to fall further. What's really interesting is the ASB said that even though, why it is that New Zealand is fixed with term deposits when really our markets have been booming ahead. And today, for example, our market...
Yeah, what's the NZSX?
We're at a record high. Today we're at let's see, we closed up 56 points at 91.09. Now
I remember not long ago you saying we were about to cross 8,000.
Well,
it doesn't seem that many months ago.
Well, actually, just about, we have increased since in the past year 15.7% return on the market if you were investing in the top 50, and you compare that with a term deposit of say 3.5%. That's not that much. House prices too are sluggish at the moment. So look, if you wanted to make hay in the sun, you'd be wanting to put your money in the market. Well, you would have wanted to, and so we're at a record high, and the New Zealand dollar, which is interesting. Okay, we have firmed up a little bit. We talked about earlier just about S&P and talking about the high U.S. dollar. That's come down a little bit, where trade talks look like they might be coming to more discussion between the U.S. and China. We'll see what happens with that. We're at 66.2 U.S. cents, 90.6 Australian, and 52 pence.
Nona Peltier. Nice to have you back, Nona. Thanks very much indeed.